It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, October 6, 2015. Cruising our way through here this second week of this 10th month of the year 2015. Boy, oh boy, another big day, Bullish reactions across the board today. Crude oil is bullish this evening, and we expect to see this price continue to push higher up to the channel highs before we're going to start looking for that measured correction back lower. I don't want to say the easy money's behind us on crude right now, but we got a huge opportunity today, and we're going to have to be staying patient here if you want to buy more tomorrow. I got a plan for you black gold traders tomorrow. How about the Emini S&P? Emini S&P range bound with a bullish bias going into Wednesday's session, so we're looking for seller failures, buying opportunities with traps to keep buying on Wednesday on the Emini S&P. How about the gold? The yellow metal is range bound with a bullish bias, right? Remember we talked about that last night? Bullish bias on gold. We have a breakout of the highs, which means we'll be looking for the measured correction, possibly a breakout pullback. I got a plan for you guys tomorrow on the yellow metal. And then, of course, last but not least, we can't forget about the euro. The euro is completely range-bound and sideways this evening as it pushes towards the range highs this evening. We'll be watching closely to see what happens when the buyers react at the range highs. We're going to have the two-strike rule, the two-try rule in play tomorrow on the euro. So we got a plan for you guys here. We got a big bull move on crude, nice range showing up here on the S&P. Bullish bias on gold and a sideways market on the euro. Before we jump into our charts, though, for today, I do want to remind you guys and gals, make sure you're watching this video on our trading blog. If you're watching it on our YouTube channel, there's a link right in the description of the YouTube video, and that'll take you over here to our trading blog. First of all, upper left-hand corner, you can grab your free pass. I got a free pass to invite you out, test drive our trade room as a member in your upper left-hand corner. Lower left-hand corner, you can join our nightly newsletter mailing list. All I need is your name and your email address, and then check your inbox. I'm going to send you a verification email. That way you'll never have to miss another newsletter ever again. Right below the video tonight, you can download all the charts that you're going to see me using tonight's video. You'll download those charts right below tonight's video on the blog. And then over here on the right-hand side, you can register for our trial membership. Learn more about what it means to be a member. Read member reviews. And, of course, don't forget, we've always got someone standing by 24/7, 365 to give you guys some help along the way. All right, guys, busy evening here. A lot of updates to the charts. Let's get started. We got a big bull run here out of crude. I loved how today they tried to say, well, it was OPEC. No, it was the EIA. Wait a second, I think somebody sneezed the wrong way. Was anybody surprised by this bullish move on crude today? Why doesn't anybody just say, because the technical pattern told us to buy today? We all knew this was coming. There was no question about it. Now, did I know it was going to take off and keep going this far? Of course not, right? But we got exactly, heck, it was delivered as approved today, right? Bullish spike in channel. What more do you want, guys? Corrects back to the base of the channel and see ya on the way up. So a beautiful run. Now, here's the problem. I don't want to say you missed it, but if you didn't get in earlier on today, the easy money buying it's almost dried up. We get a little bit longer, we get a little bit more room to the upside to go here, but really now if you want to buy this crude market, you got to wait for that measured correction here now. This is the stuff where you really had to be digging in here, and then you had one more shot end of the morning this morning when the sellers tried to take it. There was one more shot. This, of course, being the anchor chart. On the entry chart is where you're going to find your entry triggers on that. So now we've got this big bull channel on here, and really I'm kind of speculating where that high may be. We may already be there right now. It's very difficult to tell where that high is right now just because of the what's the word here? The extremely bullish, right? Irrational would be the term, right? It feels like a fire sale on crude contracts right now. And once you start feeling that, you better already be in your position because it's going to be difficult to get into it again here up in the nosebleed seats, as we say. So crude is bullish this evening, and we expect to see this price continue to push higher into the channel highs before a measured correction back lower. We got exactly what we wanted today. And now we need to stay patient for the next correction down off these highs. I know, we got to stay patient now, which is likely to come around the highs of that long-term bull channel around that 49.50. If you didn't get into this move earlier, your best option now, do not sell unless you're taking profit. I can't recommend sellers right now, but I can definitely tell you though, we have a nice even distribution here of bullish price action. This thing feels like they're trying to make a run eventually here up to 50. Who knows, right? Who knows? All I know is this. We get a measured push, second try by the buyers. That's going to put us right around this 49.50 area. I do expect this to go a little bit higher. The problem is how we get there is the reason why it's challenging for someone to come in now and buy, right? There's nothing wrong with this price going lower, then pushing higher, and then giving us that measured correction back down. That's going to be the troublesome part right now. Trying to buy right now, you're picking up sloppy seconds, right? You're literally digging through the bargain basement right now, and you really don't want to be here. I gave you guys a plan last night, right? Spike and channel up, wait for that pullback, seller failure. I mean, it was just, it doesn't, you couldn't have scripted it any better. And then, of course, the bull run up, two pushes higher. Again, I won't be surprised at all if we just finish this evening before midnight and get up to that measured move. In fact, that will be the best scenario, because then what we can do is start looking for that measured correction back down. And again, I think the hardest part right now is the only way I will be a seller tomorrow. Now, obviously, we're talking about long-term trading right now. On an intraday basis, there'll probably be plenty of selling opportunities if we see these buyers start to calm down. But as of right now, though, on a larger term scale, you can't be a seller right now unless you start seeing these buyers try and fail. Really, what I'll be looking for tomorrow before I even start thinking about being a seller here on an intraday basis is, can we get and stay below that moving average? Right? Can we get and then stay below it? That's really where you're going to have to be waiting patiently here to be a seller here tomorrow. Before we start selling tomorrow, come in and see me in the trade room. But as of right now, all I know is we've got to stay to this trend upside right now. Look for that measured correction, back down, and then we'll be looking for that next push back higher. Crude's got a good plan for tomorrow. I'm going to have to get a look at that tomorrow morning in real time. Come out and see me tomorrow. I look forward to trading that with you guys tomorrow in real time. How about the Emini S&P here this evening? Another very successful newsletter from last night, right? We got the deep correction on it. Price goes back higher. Now here we are in a range-bound market with a bullish bias going into Wednesday's session. So we're looking for seller failure and traps to keep on buying as this price goes lower. We got this cluster of support areas waiting for us below, so we probably shouldn't have to wait very long to get our teeth into sink our teeth into some buying opportunities here. The key is, though, spike and channel up. That told us keep on buying, keep on buying. We know we have 1955. That's going to be ultimately where we want to look for the best buying opportunities for tomorrow. I like to use measured corrections. Right back into this area here. So obviously I can't be exact about it, but in this little cluster between 1955 and 1960 area here, I'll be looking for seller failures. That's going to be the key right now for the S&P, at least for the next 24 hours, seller failures. I've got a larger measured correction that puts me down around this 1557 area. We have a smaller correction here, A, B, C, D, which you can see we're testing right now, that 1960. So really anything around this green rectangle area, right, from 1960 down to 1955, this is where I'll be looking for tomorrow morning. We're looking for our seller failure to buy it back up. That is courtesy of the spike and channel. We also have this trading range that you see here, bullish bias into the trading range. that means this is nothing more than a bear trap, right? So looking for, again, seller failure to bring it right back up. Targets overhead, midline, range high, midline, range high expansion. These are all easy, nice, and tasty targets, these resistance levels overhead for all our buying opportunities. Again, I can't emphasize this enough. The earliest opportunity you're going to get right now is seller failure. Then, once it starts going higher, once we know we get the bulls back in control, then you can start looking to buy those pullbacks. We're not in pullback territory yet. We're in correction territory. And during that correction, we're expecting to get some sellers who are going to misread this thing, and they're going to try to sell. And when they fail, I want to be there to buy right into those stop losses. Seller failure on the S&P, right? That's the big name of the game to get long here on the S&P. How about the gold? Wrapping up here, or should I say moving on here from the S&P to the yellow metal. Now remember, this gold market has a definite bullish bias going into this week right now. We talked about that last night on the newsletter. So we definitely have a bullish bias on this trading range. We jumped up. We go sideways. This is a different range today. I did have to adjust that range. And so now we're looking at breakout pullback. If they fail, it'll get sucked back into this range. Here's the plan for gold tomorrow. Gold is range bound with a bullish bias, and we have a breakout of the highs, which means we'll be looking for the measured correction for the next round of buying. Measured correction, A, B, C, D. Again, I want to really pay attention to that 1141.3 tomorrow. Above it, we're going higher. Below it, we're probably going to get sucked back into this range here right now, just like we talked about in the euro. This is kind of the opposite of what we saw in the euro last night, right? Where we had that little bit of pause here. If it goes higher, seller failure, buy it. If it gets sucked in, buyer failure, sell it. Right? But bottom line right now, though, is somebody puts a gun to my head and says, Joe, what's your direction, man? It's got to be a bullish, right? It's got to be bullish. We have a bullish bias going into this range right now. So back to the drawing board here now. We got that measured correction. That's what we're waiting for right now. We know that the buyers will be in control above the range highs of 1141.3. So again, we stay above the range highs, buyers in control. Below the range highs, the sellers are going to try to rotate this sucker right back down to where it came from, right, on Sunday evening. If the buyers can keep control, we'll see measured moves and range expansions. Measured moves, A, B, C, D. Again, very difficult for me to tell you exactly where that correction will come back to at this point, but that's what you're waiting for. In my opinion, right now, the best opportunity here to be a buyer is going to be waiting for that measured correction, get us back around that 41.3, and then remember, when you've got correction territory, it's seller failure, and then buy right into those stop losses. Once you get the stop losses run, then you can start looking to buy those pullbacks. You're not in pullback territory just yet. The big challenge you're going to have tomorrow is if we get in and below this 41.3. You really want to see the sellers fail, but give you the chance to buy it above 41.3. The hard part's going to be if this gets sucked back in, and then it's going to be buyer failure to sell it right back down, right? So it's going to be that balancing act around that range high. It's the exact opposite scenario that we saw in the euro, right? And you know what happened to the euro today. Hopefully you do. So, bullish bias, trading range, at the very least, this is nothing more than a breakout pattern pullback. I teach that right in my free trial. That's an easy one, right? Breakout pattern pullback. During that correction, it's seller failure to be a buyer. Once again, you don't have to trade these on your own, guys. Come out and see me tomorrow in the trade room. We'll walk you through it in real time. Now, here's that euro. Here was exactly what we talked about. Opposites happening on gold right now, right? So the euro tried to go lower. We knew the line in the sand was 12.20. Remember that from last night's newsletter, right? So here's your trading range. The sellers tried to break out but they couldn't keep it, right? Once, twice. Oh, sellers are trying. Can't do it. Buy it. That is easy money right there. That is easy money right there. Why? Because it does exactly what you want. It gives the sellers the chance to prove it. Hey, sure, give it a try. But if you fail, sellers, and you give me a shot to buy it above that range low at 12.20, there's very little chance those sellers are going to have to keep that price going lower. Now, like I said in last night's newsletter, you got your rotation target going right back up, right? So we're expecting this price to make it all the way back up to that 1300 area. We do have a measured move that's kind of playing the spoiler right now, right? So, but you know, I would imagine this is very short-lived. We should find a way up to that high. And then once we get back to the high, this is where the two try rule comes in. We had the 2 try rule down bottom. Sellers tried twice, they failed. Buy it. Yep. Back at the highs here, buyers will try twice. If they fail, yeah, sell it, baby. Now, there's a big difference on the euro because the euro doesn't have that directional bias to it. Right? Look, yeah, I know. That was last Friday's non-farm payrolls. Wait. What? What happened there? Yeah, don't look at that. Don't look at that. Don't worry about that stuff. But the reality is there's no directional bias on the euro. So I can buy and sell with the same accuracy, right? Look at the difference here on the gold. Gold has a significant directional bias, right? Take a look at that. It's cut and dry. It's straight up into that trading range. That's why you've got your trap. You've got your breakout pullback, and again, it's the 41.3 is your line in the sand. So you can kind of see there's a methodology behind all of this, right? Obviously, I'm not giving you everything. I want you guys to come out and join me as a student here at School of Trade. And once I get my hands on you, you're going to be a lean, mean trading machine. I can guarantee you that. So measured move up. We should get the rotation all the way back up to these highs, right? Markets love to rotate, right? From lows to highs, back to lows, back to highs. And that's really our goal right now. Really what you want to do on these range-bound markets, this is euro. It could be any market. It's not just the euro, but for right now, it's the euro. Is we want to see it go up, try to see those buyers do it. Give it a shot, go for it. But if you fail, and by the way, the higher probability is that they fail, I'm going to sell this sucker right back in. Then we go down to the lows, and again, just like we saw back here, right? Don't be too aggressive. Let them try to sell it, but if they fail, I'm going to buy it right back up. That's when I remind myself, make them prove it. Make them prove it. Why? Because if they fail, the money is so easy if they fail. Remember what I said last night and last week, right? When the day comes when I go off into the trading room in the sky, I hope they bury me right in a range-bound market, because that's the easy money. That's where the easy money. These strong trends are really difficult because if you miss the correction, right, like on crude. Right? If you miss the correction on crude, now you got to wait for the next correction. On these range-bound markets, you get 3 to 4 times more trading opportunities. Buy those lows, sell those highs, and use the 2 try rule here right now on the euro. So making sure we have our notes under control here. The euro is range-bound and completely sideways as it pushes up towards the highs, right? Rotation. We'll be watching very closely this area above 1301. What we expect to happen is, what typically will happen is we go up, buyers try, they fail, we sell it back down. But if they don't fail, where are we going next? We're going up to that next range rotation, right? That's why I've got all these levels on here, so you're ready for them. Right? If you don't know how to trade them, though, you need to get properly educated on this. You got to learn the right way to analyze the charts and the right way to wait for entry triggers. Our job is to fade the breakouts on range-bound markets like these until we see a clear breakout. What's my definition of a clear breakout? I'll give you a hint. You didn't see it right here, and that caused you to buy that low right out, well, not right out the gate. It actually didn't make you wake up very early this morning. It didn't happen until about 10 o'clock this morning by the time we found the actual trigger on it. All right, guys, You get the plan for euro. We got the euro here this evening, range bound. Do be patient, though, for that test of that high, and then look for the 2-try rule. On the gold, we got that bullish bias here on gold, right? Got a bullish bias on gold. Be ready for that breakout pullback and watch closely that 41.3. On the S&P, again, I'm looking at you, correction. Keep an eye on that measured correction back in, and then when you're correction mode, right, seller failure, buy it back up. If not, we're coming all the way back down. And then, of course, crude. I hate the fact that I have to say be patient on crude right now. Me and the word patience doesn't do very well. I know. It's a difficult skill to have. But you've got to remember, you can't force the best trades. You've got to wait for it. Timing is everything, not just in day trading. All right? We should go a little bit higher here on crude, finish off that measured move, and then give us the correction. And remember, tomorrow we're going to be watching for this moving average, and really what you got to see to start selling is make sure they get below it and stay below it. That's going to be your cue if you do want to put the helmet on and go to battle with the sellers tomorrow. Guys, we're having a great week so far. We really are. I hope you guys are too. Don't forget, download the charts, register for the newsletter mailing list, grab your free pass, and if you got some free time, grab yourself a copy of our free trial. We get the best free trial in the business, guys and gals. I take a lot of pride in the fact that our free trial is the best in the business. You're going to learn more with me in 1 week of my free trial than anywhere else on the interwebs. Also, don't forget, we got 3 levels of membership. Whether you're brand new to day trading or you're a grizzled veteran still trying to put the pieces together, we get a place for you guys here at School of Trade, and I've always got someone standing by 24/7, 365 to give you guys a hand. My name is Joseph. I'm opening up my trade room tomorrow morning at 8 a.m. Eastern Time, and I'll be back here same time, same place tomorrow afternoon for our 8 p.m. newsletter. Be well out there. Be nice to each other. I hope you're enjoying this beautiful weather we're having. Is it time for baseball playoffs yet? Anybody else excited as I am? Go Dodgers, go. My Red Sox are worthless right now. I know. I should be used to it. I spent my whole entire youth dealing with a worthless Red Sox team. Thank goodness I live in Los Angeles now, so I can at least put a Dodgers hat on. Anyways, my name is Joseph. Be well out there. Be nice to each other. Send me some feedback. Give me a comment or two below the video, and I'll see you next time. Adios, amigos. Bye for now.